Alrighty, folks, I want to give a special shout out to Ryan Lundquist on X or Twitter. He goes by the handle Sac Appraiser. He's one of those guys I follow on Twitter because he's always pointing out the facts. And the fact is, in Sacramento, short sales in the month of February have tripled. They have tripled. They went from 2 to 6. That is how many short sales occurred in February 2025, 6. But yes, it is fair, it is accurate to say short sales tripled in Sacramento, California. It's a fact, but the actual numbers aren't really that bad. One of the things that we need to realize that is going on in the housing market today was once again highlighted by our friend Lance Lambert. And that, of course, is housing turnover. Housing turnover is a metric that actually was remarkably consistent for decades. For the longest time, the average time you spent in a home was 8.1 to 8.3 years. Something that I shared with you 4 years ago was housing turnover was going to get bad. It was going to go from 8 to easily 12. And if it stuck around long enough, we might see 15 years. Well, folks, we are on that trajectory. The housing turnover is growing or collapsing, depending on how you want to look at it. And that, of course, why? First-time buyers. They're frozen. They're out of the market. We're going to get something later this week, existing home sales, and they're going to come in under an annualized number of 4 million. This is what I guessed, estimated, forecast was going to happen in 2025, is we were going to see sub 4 million transactions. Housing turnover is going higher. This is all to be expected. Add on top of that a consumer who is scared. They're hearing tariffs. They're hearing layoffs. We saw a pretty disastrous consumer sentiment on Friday. And I don't know if you know this, but hopefully you do if you watch this channel. What does the consumer do when they're scared? They sit on their hands. The average consumer is not going to go sign the mortgage for the largest home purchase of their life. They're just going to wait and they're going to see. Now, historically speaking, consumers could sit on their hands for about 6 months. So I think we are on the cusp of that. In fact, by the time you are watching this, we are going to get February's retail sales. Now, the estimates are actually a little bit higher than I would have expected. Retail sales were estimated to be up 0.6 after falling 0.9 in January. Again, I'm recording this hours before this number comes out, but it will come out before you see it. And I got to tell you, I think this number is going to come in light. We've been hearing from retailer after retailer taking down their expectations. And I just don't know how this number is not flat or even slightly negative. Well, again, I'm calling that early. So by the time you watch this, I could be completely wrong. And of course, if I'm wrong, I will own it. But yes, we get retail sales Monday morning, and it's an important number. Treasury Secretary Bessent is out on the wires, not guaranteeing we will avoid a recession. Folks, the messaging coming from the White House has been pretty consistent. We need to get off the government dime. A lot of the last 4 years was government spending. In fact, GDP was positive because of outlandish government spending. When you switch an economy from government spending to the private sector, it's going to be dicey because you have a timing issue. You can cut off government spending relatively quickly, but the private sector, a private sector that has consumers, business owners nervous, well, they're unlikely to pick up the ball. They're not going to pick up the torch. So a recession, a downturn, frankly, makes logical sense. And they're ready for it. I think one of the things that you've heard Scott Bessent talk about is if that happens, Powell would be forced to cut rates. And bingo bango, mortgages go down. We get a refi boom. You know the drill. So we are looking at that. Again, we got a bunch of retailers making noise. What are the big retailers doing because of these tariffs coming out of China? And the threat, I think, of another 10%. Well, Walmart, Home Depot, right? The big retailers, they're doing one of three things. One, they're haggling, right? They're trying to get a better price. Two, they're diversifying. And this is the point of tariffs. Companies like Home Depot and Walmart and likely hundreds others are looking for suppliers not in China. So, message received, execution done, and that's going to hurt China. If you've seen some of the Chinese economy numbers, they are not good. And if you have more big consumers like Walmart, Home Depot, and the like out of China, it's only going to get worse. So again, retailers, big retailers haggling, diversifying, and frankly, raising prices. This is why we have seen over the last week inflation expectations that frankly should scare the bejesus out of Jerome Powell. We're going to hear from Jerome Powell on Wednesday, and I hope they ask him about inflation because we have inflation expectations up at almost 5%. I think it was 4.9%. That is nowhere close to 2%, and frankly, nowhere close to where we are today. So, not good. We have Delta, we have airlines telling us that consumers, businesses, and of course the government are slashing their purchases. So what does that mean? Again, you're not going out with big purchases. One tweet I saw said that government spending on travel is down 50%, to which I say, good, I'm glad. Again, it is time that we get off this. Wells Fargo expects housing to actually be a negative contributor to GDP. What does that mean? Again, when you look at the entire GDP, gross domestic product, real estate, housing is about 12 to 13% of that number. So what Wells Fargo is telling us is the housing segment will be negative or contracting from GDP in 2025. This again, folks, something I have been saying. This is the last hard year for housing. But according to Wells Fargo, housing will be a positive GDP contributor in 2026. U.S. money supply, M2, you've heard about it, right? It's collapsing, it's falling. Well, folks, no longer. The M2 money supply grew by 3.9% in January. Housing affordability is at an all-time low. Unfortunately, the fix is not pleasant. As I've tried to share with you for 3 or 4 years now, I think housing prices are going to be relatively flat. Rates slowly will fall, and then wages will slowly rise. This is not going to be a quarter or a year fix. I know there's a lot of housing doomers calling for yet another 10 or 20% crash in 2025. Housing doesn't move like that. I have heard about some of the FHA shenanigans, and we've talked about them. Again, not enough inventory to move the market, but certainly some bad behavior with some handling of FHA. Frankly, they should be foreclosures. Bank of America research says the handoff from big government to spending in the private sector is a timing risk. We shared this briefly earlier, but we should know that we were on an unsustainable fiscal path. It was not going to end well. We got some data out of National Association of Realtors and Builders saying that new home construction, if tariffs on Canada and Mexico go through, will add $10,000 to a new home. Dow Jones posted their worst week last week since 2023, even though there was a little bounce on Friday. It'll be interesting to see where we go from there. Are we headed for a correction? Well, we're there. Correction often defined as 10%. I believe we hit that on Thursday or Friday. But are we heading to a bear market? Is this 2022 all over again? Some people that follow this channel know that we have some folks saying, yeah, this feels like a setup for 2022. It'll be very interesting to see what Jerome Powell says on Wednesday, talking tariffs, recession, inflation expectations, all very, very important. And then the last thing, folks, Q1 is wrapping up. For a lot of folks, March is the end of Q1. It'll be very interesting to see where we have, earnings announcements and the like going forward. Hope you have an amazing day. Take care. Don't forget to join school. Later.